Did you know that celebrity investor Cathie Wood is still quite bullish on Tesla stock in spite of the current economic uncertainty? Wood has stated that she believes Tesla will increase in value 5 times by 2026, despite the fact that the company has barely recovered from last year's lows. You wouldn't want to pass up this opportunity. EVE by themselves are fantastic star investments. Cathie Wood responded to Sam Corse's tweet on January 7th, saying that it was in response to the confession of the director of research for autonomous technologies and robotics, which Cathie had retweeted. Sam Corse stated that Tesla's margins, it should be among the best positioned to withstand any cyclical slowdown in auto sales because of its superior drivetrain efficiency and inexpensive battery. As it has done in the past, it can be the first to cut costs, which puts pressure on other manufacturers. In response to Cathie Wood's tweet, the ARK executive stated that under ARK's Sife Kinitasha, Sam Corse research and ARK's Wood claims that autonomous ride hailing is not necessary for Tesla to succeed. Presenting ARK's research, ARK's director of investment analysis and institutional strategies, the Tesla EV opportunity alone is immense. Tasha Kini stated in a tweet that eliminating ride hailing services and autonomous driving will, in her opinion, increase Tesla's worth by more than 60 by the time it reaches its 2026 pricing in 5 years. Target would climb by more than 4 times from the current price to almost 500 per share after the split based only on EVs. It should be mentioned that ARK Invest released the Tesla value model in the middle of April. In their most recent open source, according to ARK's revised open source data, the Tesla model predicts a value per share of $46,500 in 2026. However, it should be noted that the model was published before to Tesla's August 3-for-1 stock split. Model Tesla from Tesla's viewpoint across the simulation set, the robotaxi business line is a major driver, accounting for 60 of expected value and more than half of expected EBITDA or earnings before interest, taxes, depreciation, and WIF. In 2026, electric vehicles are expected to account for 56% in the company's revenues in 26, albeit at significantly lower margins than robotaxis. Although they previously believed that Tesla would never be able to introduce autonomous ride-hailing, recent encouraging developments have led ARK to become more confident in Tesla's capacity to accomplish full self-driving. Therefore, revenue due to Tesla's innovations. They changed their minds and decided that the company would launch 4 years later than Musk had anticipated. They also suggested that Tesla would begin selling autonomous ride hailing in 2024. But in 9 of their model cases, Tesla would not sell robot taxis within the 5-year window, if and only if they do so within the forecast window. The Model Tesla's financial outcomes are dependent on the year of launch. Tesla's capital efficiency is also increased by the new model from ARK Invest. As the Model 3 was ramping up, Tesla's capital expenditure per incremental unit of capacity improved to approximately $7,700 in the previous year's model. By 2025, they projected that Tesla would spend between $6,000 and $8,000 per incremental unit of capacity. It's probably safe to anticipate that the Tesla will spend $2,000 to $7,000 per additional unit of capacity in 2026, given its far better than expected capital efficiency. The ARK Invest team also stated that should Tesla be successful in launching robot taxis, they anticipate that the technology will revolutionize the industry by 2026. The average of all 1 million simulations is the predicted value, stated that in most of the ARK's lowest price per share scenarios, the simulations are quite sensitive to the year that Tesla finally launches robot taxis. In other possibilities, Tesla does not offer either service and has not made a public commitment to launching human-driven ride-hail. In other circumstances, Tesla launches a vertically integrated human-driven ride-hail service, but does not introduce a robotaxi network. Before Tesla launches a fully autonomous service, ARK previously described the strategic and tactical advantages of doing so, emphasizing that it could turn into a lucrative recurring revenue stream. This is especially important in the event that Tesla launches a human-driven ride-hailing service and finds a solution for fully autonomous driving. If ARK is not able to introduce a robot taxi service in 5 years, it anticipates that its human-driven ride-hailing vehicles would eventually make the switch to the autonomous ride-hail network. ARK executives recently tweeted that even in the absence of autonomous driving and ride-hail, Tesla's value over the next 5 years would increase to approximately $500 per share post-split based on EVs alone, which is more than 4 times higher than its current price of approximately $123 per share. Wood can be remembered as having stated in a Yahoo Finance interview that they believe gas-powered vehicles will become obsolete within the next 5 to 10 years, and that the traditional auto industry must find a way to transition to electric vehicles. In a CNBC Squawk Box interview, Tisha Keeney explained why ARK has a positive view of Tesla. Keeney noted that while electric vehicles only make up a small percentage of total auto sales, we must keep in mind that the market is still developing. Nevertheless, we do see Tesla as one of the market leaders in both electric vehicles and autonomy, and most other automakers will not be able to compete with or surpass Tesla's combination. So that's very important from both a performance and a range perspective. When asked what she thought of Tesla after 5 years, Cathie Wood responded that the company has a distinct advantage over other automakers. She said that if one compares cars based on factors other than brand, such as range and power combination, Tesla is the best option available. However, she also noted that while well-known, automakers like BMW and Volkswagen have made great strides in recent years. Tesla still has a significant advantage over them. According to Wood, most other automakers won't be able to match or surpass Tesla's combination unless they want to incur losses on their vehicle. When questioned about her thoughts on huge firms competing with Tesla in the development of electric vehicles, Wood stressed that it's crucial from both a performance and range perspective. Wood claims that although consumers may still be persuaded by brands, they won't have as good of an electric vehicle as Tesla will offer. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from petrol-powered to electric and look at the specs of the different cars, they will fail miserably at branding. Cathie Wood's actions, which include continuing to buy more Tesla stock even as a relentless sell-off is dragging down her flagship company, demonstrate her great belief in the company's future. ARK Funds actually purchased 100,000 shares of Tesla on January 10th, worth at $12 billion as of that day's close, even after multiple dip purchasing sprees over the previous several months. Prior to that, Wood's flagship at the automaker's closing price of 108.10 cents on January 3, the ARK Innovation acquired 145 zero Tesla shares valued at $15.07 million. Meanwhile, the ARK Autonomous Technology and Robotics ETF acquired an additional 31 zero Tesla shares valued at $3.4 million as per daily transaction report. Together, these purchases are valued at approximately $19 million. Those transactions were made amid the 12.2% decrease in Tesla's shares, which was at the time the greatest one. Day decline since September 2020. Since November 2021, the stock has dropped by approximately 75%. Why have so many investors continued to use Wood? Her one outstanding year undoubtedly contributed to ARK Innovation's 153-fold increase in 2020. Before a devastating 2022 sell-off erased ARK's gains, Wood, who invents best in firms engaged in disruptive innovation, made millions amid the surge of Tesla and other favorites in the early days of the pandemic. Wood has also emerged as something of an investment rock celebrity. According to a recent Barron's article, Cathie Wood of ARK believes there is still room for Tesla stock to grow. USC attributes this to the company's efficient manufacturing and the rise of autonomous taxis. Overall, ARK projects that Tesla stock will reach a price of $500 per share by 2026, more than 4 times its current valuation based solely on its electric vehicle business. This projection takes into account the 3-for-1 stock split that went into effect on August 25, 2022. This provides further perspective for the 4,600 pre-split price estimate for 2026. The company declared in mid-April 2022 that it is eliminating autonomous driving and ride-hailing services of any kind from its valuation structure. According to industry analyst Tisha Keeney, the firm projects that these 2 reasons will account for over 60 of Tesla's value over the next 5 years. The prediction of $500 per share is a more than 4-fold gain from the stock's current levels, the statement continued. Don't forget to subscribe to this channel to receive updates on Tesla stock.